One of Wall Street's top Tesla bulls cutting his price target on the company to 1,000 from 1,400. Dan Ives is Wedbush Securities Managing Director of Equity Research. He joins us on the Squawk Newsline to explain his call. I guess, Dan, it's not as simple as, you know, seeing a stock that's breaking below 700 when you have a $1,400 price target. You normally wouldn't have a 100% appreciation. I don't know how long your price target. I don't know what the duration is, but it just seemed I've seen a lot of analysts just do that when they're wrong about which way the stock's headed, and they lower it just so they don't look ridiculous with what they're on record for. But you've got a rationale here based on China.
Yeah, and that's never been our DNA. I mean, look, it all comes down to China. China is the key part of our bull thesis in Tesla. And really, I'd call it an epic disaster, what we're seeing so far for the June quarter. I think for deliveries as well as production on the zero COVID issues, deliveries are going to be soft. And I think the trajectory is going to be a lot slower for the second half of the year. And that's why we're lowering the price target, cutting numbers. And clearly, I think at least over the coming few weeks, it's some darker days ahead for Tesla in terms on the delivery side.
Now that I recall, we had Munster on earlier, and I guess he said his price target's 2,500 for Tesla. Your bull case on Tesla, even if the 1,400 or 1,000, where it is now, is in large part a story about China.
China's the hearts and lungs of the Tesla story, and you know, we were optimistic, you know, that they were going to be able to navigate some of these issues better than expected. But everything we've seen over the last week, you know, makes us a little more negative in terms of June as well as second half. And look, we call like we see it, and we're still bullish on Tesla in terms of the long term. But then, look, you combine this with the circus show that we're seeing with Musk and Twitter. It's just been, you know, really a Category 5 storm for investors in terms of feeling like Musk is essentially out to lunch at a time that Tesla ecosystem has never needed him more in terms of the supply chain issues in China.